Welcome back. In the last session, we have dealt in detail the concept of profitability ratios. What are the various ratios that comes under the profitability ratio and different cases relating to profitability ratio. And under profitability ratio, there are two heads. One head is profitability ratio and the other one is overall profitability ratios. So let's discuss in detail the second head, which is known as overall profitability ratios. Overall profitability ratios. As we all know, profits are the measure of overall efficiency of a business. We all know the concept. The higher the profit, the more efficient is the business considered. For example, if a company earns a net profit of rupees 50,000, while another company B earns a profit of 40,000, it is evident that company A is better. Changes in total profit may although indicate change in efficiency, but they will not indicate the true state of efficiency of the business or profitability unless profits are related with the size of the investment. So we can't measure or scale or interpret an organization simply on the basis of profit earned by the concern. So remember the concept. Overall profitability or efficiency of the business can be measured in terms of profit related to investment made by the business, not on the basis of mere profit comparison of two concerns. Mainly depends upon the investment made by the business, and on the basis of those investment we can study whether the organization is earning sufficient profit or not. And under overall profitability ratio, it is analysis of profitability in relation to the volume of capital employed or investment in the business. Management and shareholders are interested in ascertaining the return on capital employed or return on shareholders fund likely. So some of the important ratios that comes under overall profitability ratios are return on total asset, next return on capital employed, return on shareholders equity, and finally return on equity capital. Here even though the previous ratios are mainly for external as well as internal users, under overall profitability ratios, these ratios are mainly for internal purpose or the internal users. So let's discuss in detail various ratios that comes under overall profitability ratios. First one, return on total assets. As the name suggests, return on total assets is otherwise known as return on investment ROI or return on gross capital employed. Just familiarize with all these terms because they can be used synonymously in each question, and it can be calculated by using the equation. Return on total assets is operating profit divided by total tangible asset. Operating profit total or total operating profit or operating profit, those terms can be used synonymously. Operating profit divided by total tangible assets into 100. And as the name suggests, operating profit is otherwise known as earnings before interest and tax, and you guys already know what is meant by operating profit or otherwise known as earnings before interest and tax, and how we can find out the value or amount of earnings before interest and tax or operating profit. And regarding the terms in the equation, here the denominator used in the ratio is total tangible asset. It means total assets excluding non-business assets and fictitious assets. Non-business assets means those assets which do not have any relation with the current business which the concern is dealing with. For example, if I am a businessman or if I own a company, my mode of operandi is it may be a shoe manufacturing company. And an example of non-business asset for me is if I invest a certain sum of money in share market or invest in some real estate aspect, in that case such investments are known as non-business assets because those investment doesn't have any direct relation with my mode of activity because my mode of activity was shoe manufacturing. Those investment doesn't have any relation with this business. Such items are known as non-business assets. And fictitious assets includes preliminary expenses, discount on issue of shares and debentures, something like that. Just go through all these examples. And next, the numerator used in the ratio is operating profit. As we all know, net profit adjusted for interest on borrowed funds, non-operating expenses and non-operating incomes. And higher ratio implies that the organization is having a better overall performance and efficient use of total assets. And the lower ratio is just the opposite of the higher ratio concept. So remember, whenever you're getting a higher ratio, just give an interpretation like that. Otherwise, vice versa. Next one, return on capital employed. Return on capital employed. As we have discussed about this capital employed aspect in many sessions in previously, you need to have an idea about what is meant by capital employed, how the capital employed can be find out. And return on capital employed establishes the relationship between profits and capital employed. It is a primary issue and is considered the most widely used to measure the overall profitability and efficiency of a business. And regarding the capital employed that is used in the equation, it can be gross capital employed or net capital employed or both the cases. Sometimes the terms may be used synonymously, either net capital employed or gross capital employed. It depends upon. And net capital employed or simply called capital employed means long-term funds used in the business. So in order to find the capital employed is total assets excluding non-business assets and fictitious assets. Non-business and assets which we discussed just previous slide. Total assets excluding non-business and fictitious assets minus current liabilities. And alternatively, capital employed can be calculated from the liability side of the balance sheet. The equation is capital employed equal to shareholders fund. As we all know, SF means shareholders fund. Shareholders funds include equity capital, preference share capital and reserves and surplus plus long-term borrowings, which means LTV. Long-term borrowings, you all know long-term borrowings include bonds, debentures and minus non-business assets plus fictitious assets. Even though these two equations can be used for finding capital employed, the term capital employed has a wider meaning if we are dealing capital employed in a broader concept. Because the term capital employed can be referred in different sense. Because the term capital employed refers to the total of investment made in business and can be defined in number of ways. And some of the major ways are: first one, gross capital employed. Sometimes the capital employed can be specified as gross capital employed. That means fixed asset plus current liability. It's a simple equation. And sometimes it can be expressed as net capital employed. It means total assets minus current liability. And finally, proprietary net capital employed, that is from the proprietor's point of view or shareholder's point of view. the equation is fixed assets plus current assets minus outside liabilities. Remember, the outside liabilities means short term as well as long term liabilities. Sometimes capital employed can be find out or identified on the basis of equations like this. So it's depend upon the details given in the question which type of capital employed equation you have to follow. Based on the information given in the question, you can follow any of the equations, and the answers for finding out the return on capital employed varies for each individual, because some students may follow any one of the equation. It doesn't mean that you need to follow, everyone has to follow one particular equation. If the question demands any particular equation, you follow as per that equation. If the question doesn't give any details regarding or information or hint regarding which capital employed we have to use, you can use any of the capital employed equation. So remember, capital employed is in wider sense, it has more than 5 or 6 equations, and currently we have discussed 5 major equations for finding capital employed. So remember, these two are the major equations which you have to deal, because as per the syllabus and the text, it is specified that capital employed can be identified using these two equations. But apart from these two equations, you can either use these 3 equations also. So it depends upon the details given in the question, you can follow any of the equations, but preferably use these 2 equations. And finally, return on capital employed. The equation for finding your return of capital employed is operating profit divided by capital employed into 100. As we all know, operating profit, it's a same old age old word which we have been discussing in the previous sessions. Operating profit is otherwise known as EBIT, or earnings before interest and tax. And if you are getting a higher ratio, it means that the organization is highly efficient in utilizing the capital employed. If you are getting a lower ratio, it means the organization inefficient in utilizing the same item. So while dealing with the return on capital employed, just remember the various concepts. And next, return on shareholders' equity or return on net worth. Return on shareholders' equity, otherwise known as return on shareholders' investment or return on net worth. Return on shareholders' investment, popularly known as return on investment (ROI), or return on shareholders or proprietors fund. It studies the relationship between net profit after interest and tax and the proprietors fund. The equation is return on shareholders equity or shareholders fund or net worth is net profit after tax divided by shareholders fund. Remember, then you have to use net profit after tax. Usually the equation or the concept is calculated on percentage basis, that's why you need to multiply it with 100. As we all know, the 2 basic concepts of this ratio are net profits and shareholders fund. Shareholders fund include equity share capital, preference share capital, reserves and surplus such as share premium, revenue reserve, capital reserve, retained earnings, surplus. If you have any losses, you need to deduct such accumulated losses. And net profit, regarding net profit, you need to take net profit after deducting tax, because here we are studying the returns of shareholders, and only after adjusting all expenses and taxes, the remaining amount is eligible for the shareholders. And while computing, if you are getting a higher ratio, it means the shareholders are getting a higher return on the base of fund investment. If they are getting lower ratio, it means they are not sufficiently rewarded for their investment. So just go through all these ratios. We will discuss about the further ratios in the coming sessions. That's all for today. Thank you.